strata of income?
Sure. I think that people are frustrated, and I think that capitalism has failed these people in many ways, and definitely the burden of the pandemic has been imposed upon younger people for a complicated set of reasons. But I think the way to deal with that is not to give into university-style values and criticize commercial capitalist society, but to have a more rigorous and more competitive system in which people can make it on their merits. But I think there's more to what young people are saying than just frustration with a particularly badly handled pandemic, particularly I think in the United States, badly handled pandemic. There are very serious issues of values. You have people saying that they don't like capitalism, they don't like competition, they don't like meritocracy, they don't like billionaires because they think society is structurally unjust. Not that it can be improved, but that by its very nature, by its essence, American society in particular is unjust. And I think that goes from rightful criticism of the way the system operates to something that's more sweeping.
We'll continue this later when we talk with the author of Davos Man. This, though, was Adrian Wooldridge. He's global business columnist at Bloomberg Opinion on the phone from London. You're listening to Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you're listening to Bloomberg Business Week on this Monday. Carol Massar along with Tim Stenovic, and an interesting story. And in fact, it's the Bloomberg Big Take today. Coming up in just a moment, it has to do with hedge funds.
Yeah, an army of faceless suits taking over $4 trillion in the hedge fund world. We're talking to them all about that with Nishant Kumar in just a few minutes.
In the meantime, let's get back to your top business stories on this Monday. Hey, Charlie Bellett.
Well, hello there. Happy Monday to you all, by the way. After last week, here we are kicking off the brand new week, and we're looking at an up day. Stocks solidly in the green. The Dow, the S&P, Nasdaq all advancing. Dip buyers coming back into the market after last week's central bank jitters and volatility during the corporate earnings season. By the way, after the bell, among the companies we'll be hearing from today, Cirrus Logic. Its shares are pushing higher right now. Cirrus up by just about 3%. But we've got the Dow, the S&P, and Nasdaq all rallying right to the numbers, with the S&P up 64, a gain of 1.5%. Nasdaq up 371, higher by 2.7%. The Nasdaq 100 index up 2.6%, and the Dow up 263. That is a gain of 0.8%. 10-year down 1/32, 10-year yield 1.77%. Spot gold up 0.4, up $7.83 the ounce to $17.99. West Texas Intermediate crude oil up 1.3%, $87.97 a barrel on WTI. The Centers for Disease Control is raising the COVID travel advisory for Mexico to very high. South Africa, meanwhile, is easing COVID-19 rules and cutting isolation time. Here in the U.S., Dr. Joshua Sharfstein is Vice Dean at the Johns Hopkins Bloomberg School of Public Health. He told us he is encouraged by the improvement in COVID numbers.
I think the national mood will really start to change as deaths come much further down. And this is approaching the moment, where we are going to see COVID start to fade a little bit more into the background. I don't think we'll have nearly as much disruption in our lives in 2022, barring the emergence of something that we haven't anticipated, which of course could still happen.
Dr. Sharfstein with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. New York, meanwhile, reporting 5,100 new virus cases, while New York is also reporting 87 new COVID-19 deaths. Checking some of the vaccine stocks that we follow on a regular basis. Pfizer down now by 5.8%. Its German partner BioNTech, its ADRs up 5.4%. AstraZeneca down 1.8%. Moderna surging 5.1%. Johnson & Johnson up by 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, the Bloomberg Big Take today, not sure if you've noticed, but just about all of the new money in hedge funds, Tim, going into one strategy.
Yeah, Nishant Kumar writes all about it, senior hedge fund reporter for Bloomberg News. Nishant joins us on the phone from London. Okay, so you write, Nishant, that the most successful idea in hedge funds is now simply strength in numbers. Investors are plowing money into funds that don't rely on the next macro genius or star stock picker. Instead, though, offer an army of traders who invest in an array of strategies. What has shown that this is the right thing for hedge funds to be doing right now, and how is this different or a departure from what they've traditionally done?
It's absolute, 180-degree turn for the hedge fund industry. If we look at the history of this $4 trillion industry, it was always built around individual. There are rock star trader leaving a prop trading desk, starting his own hedge fund, raising billions of dollars, and making money out of it for himself and for investors. Multi-strat is a completely different approach. Here, individuals do not matter. These firms collect all these individuals, put them, let's say, in a hedge fund factory, and make them work, manage them very tightly in terms of risk management, and get the best out of them. And those who don't cut it, they are immediately fired. So it's an amazing world which is completely different from what the industry used to be. And that's why this is a very, very different kind of a shift and potentially a permanent shift in the industry.
So the way
the results are,
well, and the way it used to be was, as you write in your story, launch a fund, name it after yourself, call the shots, and profit. But you're saying that's not what's going on.
Not at all, not at all. And this is kind of the future of the hedge fund industry. And it's triggered by the kind of investors who are putting money into the industry. No longer rich individuals and family offices are contributing the most to the industry. These are now the investors are pension funds, endowments. So very long-term thinking is driving this change. They don't want to bet on an individual who will make them money, but then once in a while it will blow up, and these investors will end up, as we have seen, losing so much money that it becomes harder to recover that money. That generally doesn't happen with multi-strat setup because of their very tight risk control. And the best example of that, we can look at the two largest players in the industry. If you had invested $1 million in Millennium, that is worth about $67 million now. Citadel, another multi-strategy hedge fund, it has turned $1 million into $236 million. This is like multiple times the returns one could have got even by investing in a bull market, in the historic bull market, in S&P 500 index, with including dividends. So hedge funds always face this criticism that, look, they're not beating stock markets, but these multi-strats have proved that they can.
So, well, give us an idea of how hedge funds have done, because each year around this time when we start to learn about how hedge funds have done in the previous year, and this year is no exception, there are many, many of them that did not beat the S&P 500.
No, average hedge fund was up just 10%. That's well below S&P 500, but that is not.
Is that after fees? Is that after fees?
That's after fees.
Okay.
But in 1 year, it's not fair to compare a hedge fund return with an equity index return in single year. We should always look over a longer period of time. So hedge funds are not in the business of making you the most money in a rising market. I mean, they win over the long term by not losing you money, and making enough money in the rising market. And a combination of this give you a better result. As I just stated, 1 million turned into 67 million at Millennium over 3 decades.
No, it's interesting. You're right. They don't maybe perform as much on the upside, but they certainly then don't lose as much, or that's the thinking or hope, that they don't lose as much on the downside. There's a lot in this story, and I highly recommend folks check it out at Bloomberg.com. We'll try and put it out on Twitter as well. Nishant, thank you so much. Nishant Kumar, he's senior hedge fund reporter at Bloomberg News on the phone from London. But it does sound like, Tim, this strategy has a lot more predictability in terms of performance. Yeah, check out this one online too, if you haven't read it, because there's some great charts in there as well that really put into context Nishant's reporting. All right, let's get to world and national news. Back over to Nancy Lyons. She's in our Washington, D.C. bureau, our 99.1 studio. Hey, Nance.
Thanks, Carol. At America's request, the UN Security Council has taken up the threat posed by Russia's military buildup along Ukraine's border. Only Russia and China were against today's public hearing. Bloomberg's Irv Chapman with more.
U.S. Ambassador Linda Thomas-Greenfield said private diplomacy continues and offers Russia the opportunity to stand down.
All of these meetings have been in private. We think it's now time to have a meeting in public. It's about honoring the UN Charter that calls on us to protect peace and security, the peace and security of one of our member states.
The ambassador cited Russian denigration of Ukraine's independence and said Ukrainians have the right to determine their own path. In Washington, Irv Chapman, Bloomberg Radio.
Joe Rogan is apologizing, and Spotify is adding content advisories to his podcast episodes that cover COVID-19. This is all in an effort to tamp down a controversy around misinformation that had singers Neil Young and Joni Mitchell pulling their music off the platform. Gigi Granville is a professor at the Johns Hopkins Bloomberg School of Public Health.
you have to shut the poison off at the source. It's contaminating the discourse, and we need to have a lot more of the right information, the correct information, so that people can make an informed decision.
Johns Hopkins professor Gigi Granville. Spotify is rebounding today after losing nearly $4 billion in market value last week. Canadian Prime Minister Justin Trudeau says he has tested positive for COVID-19, but he says he is feeling fine and will work remotely. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. Carol Massar, Tim Stanovic at Bloomberg headquarters in New York City. This story popping up by our Max Reyes, Bloomberg News. Deutsche Bank employees, they are back in the company's U.S. headquarters. This is after working from home during the recent surge in COVID-19 cases fueled by the Omicron variant.
Yeah, staff at Deutsche Bank, of course, based in Frankfurt.
Omicron, right?
Omicron.
Potato.
Yeah, I don't know.
I'm so sorry. Omicron.
You were at the end of this variant, Carol. Come on.
Omicron. I know.
Do better for the next variant,
Can
okay?
we just have the Smith variant, please? Or the Jones variant?
No, not going to happen, okay?
I'd be okay with that in the pronunciation.
Not going to happen. So let's get back to what we're talking about. It's okay. Truly, though, you heard Charlie Pellet earlier talk about the decline in cases in New York City.
Right.
We're seeing that nationwide. There are still some hot spots in the United States right now where cases are increasing. We are seeing hospitalizations still high and deaths are because of those lag. But from a cases perspective, we are starting to see them go lower, or we are consistently seeing them go lower.
Monday, huh?
Yeah, exactly. And now some companies are saying, okay, well, it's time to get back to work.
Yeah, employees at other Wall Street firms set to return to office buildings vacated as Omicron ravaged, certainly the Northeast. Goldman Sachs asked U.S. staff to resume in-person work. That's tomorrow. We had reported that previously, as did Credit Suisse Group. Meantime, Citigroup employees in New York, New Jersey, and Connecticut were asked to get ready for a February 7th return. So they have, until next week?
Yeah. It makes sense. I'll tell you, I rode the subway this morning, and I've been riding the subway a little bit over the last few weeks. A lot busier this morning.
Yeah, roads were too. So you definitely see it coming. I'm thankful, grateful if these cases are peaking and we're coming around. That would be really nice to see us get back to quote unquote normal.
Yeah.
Yeah.
Yeah, I don't know. I'm very optimistic, Carol.
Me too.
But I also feel like I've seen this movie before.
Yeah.
And then then it was Delta variant, and then I was like, okay, we're done with the Delta, and then it was So fingers crossed.
What's
okay.
that Omicron? Like 1B, 2B,
Omicron is fine.
2AB, or whatever the heck it is. It's cool.
Got it.
That's my quote for the day, week, and month already. Tim Stanovic says, Omicron, it's cool.
It's cool.
This is Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Final trading session for the month of January, and stocks are at their highs of the day. The Dow, the S&P, and Nasdaq are all gaining right now. S&P up 63, up by 1.4%. We've got dip buyers coming back into the market after last week's central bank jitters and volatility during the corporate earnings season. Most S&P 500 companies are meeting or beating expectations. The Dow up 247, up 0.7. Nasdaq up 362, a gain of 2.6%. 10-year yield 1.77%. Spot gold up $7 the ounce, up 0.4%. And West Texas Intermediate crude up 1.3%, 87.98 a barrel on WTI. Again, recapping, the S&P up 1.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, the latest issue of Bloomberg Business Week, it is now out, and in the current issue is a story about another casualty of the pandemic, those that work in our pharmacies, Tim. It's a story that really caught my attention, having a family member, a cousin who has been a pharmacist.
Well, it really caught mine, too, and for a couple of reasons, which we'll get into. Angelica Peoples wrote it. She is healthcare reporter for Bloomberg News. Also joining us is Joel Weber right now, editor at Bloomberg Business Week. Angelica joins us on the phone from Boston. Joel joins us on the access line from Brooklyn. Joel, I got to be honest with you, before reading this, we think about frontline workers, right? I think oftentimes we think about the people who work in hospitals who are, actual medical providers in the sense of like they're working with patients in a clinical environment. I hadn't thought about the toll that this took on pharmacists.
Yeah, and that's where Angelica went with this reporting. It surprised the heck out of me as well. I mean, at this point, 2 years of pandemic, you would think that maybe we'd have fewer surprises at this point. But these are, as we say in the story, these are really invisible victims because they're people that we basically just take for granted and yet they're the ones that are on a different front line, right, Angelica? So tell us what kind of crisis is unfolding in the pharmacy profession.
Say that I was also surprised that unfortunately this is something that we've been hearing about for years, that the pharmacy industry has been under a ton of pressure. They're making less money for dispensing drugs, and because of that, and obviously there's Amazon and e-commerce threatening the sales in the front of the stores, and because of that, we've really seen these companies trim back on their staffing, and people have been complaining about the situation that it's put them in. And then all of a sudden you add vaccines and you add COVID tests, and people just feel like it will never end. And even when they caught a break, the first wave of the booster or the vaccines were done, then you have boosters, and then you have child vaccines, and it feels like to some of these workers that it's never ending. And so that was the overarching situation that they described. And then obviously people are leaving, and if people don't want to work in the pharmacies, it's just this never-ending cycle of getting busier and busier.
So how bad is it getting, and what does it mean in terms of these companies where pharmacy is a big business for them?
Yeah, it's getting bad. I mean, we were looking, and there are not tens of thousands, but at Walgreens alone, there are 16,000 openings for pharmacists or pharmacy technicians. And those are people who work in the pharmacy, and they help fill prescriptions and talk to doctors and do all of those things. And then they have another, 10,000 openings at CVS. And they also both have thousands of openings for pharmacists, which that's not great, right? If you need people to come and do these jobs, and it's not like anyone can just walk off the street and apply to be a pharmacist or to work in the pharmacy counter. You really need to have that steady pipeline of people.
Yeah, I hope this isn't a job that you can get too easily. But at the same time, the other element that surprised me in your reporting, which I think I've known about this profession before, is that it's not low paying. This is actually a really good salaried positions, and yet there are thousands of these openings. So what when people talk about the wages in this, is that seems like you would have a lot of people maybe aspiring to break into this profession. Is that not the case, though?
One of the things that we heard in talking to people is that some people just decided it wasn't worth it, especially when you think about if you are a pharmacist, you go through years of school, you walk out with a very, very good degree, and you also probably walk out with hundreds of thousands of dollars in loans. And to some people, they look at how much they have, how much they owe, how much they're making, and they think about how stressed out they are, and they just decide, you know what? I will find another job. I'll either go to a hospital where they tend to pay pharmacists more, or they'll go to another pharmacy role. Or we even heard some people going into real estate or going and doing other things and just giving up on the profession entirely because they decided this is not worth my mental strain.
So where do the pharmacy chains go from here? How do they take these jobs, which you write to pay up to $129,000 a year? How do they find people to fill these jobs?
It's a great question, and we should note that both Walgreens and CVS talked about how they are increasing wages. They both set the minimum wage at $15 an hour. That's for everyone in the store. Obviously, pharmacists make more than that, but they're also, paying out bonuses, and they're hiring all these people. But it's not clear, right, if that actually changes things. And when you talk to pharmacists in the store, they talk about the fact that they need more hours, they need more help in the stores. And that, of course, comes from corporate to decide that they'll staff more. And, I don't know if I have a great answer right now, because at least what I'm hearing from the companies and what I'm hearing from the people on the ground are two very different realities.
Another interesting element that the story sort of hints at is that there's the Walgreens and the CVS's, the big pharmacies, but there's also like the small mom and pop ones. And I'm wondering how this toll is affecting those kind of small businesses, in addition to the way it's playing out for the bigger national global brands.
The independents are very attractive employers right now. Actually, one of the pharmacists we spoke to, Jennifer Morrow, she left CVS and got a job at an independent pharmacy. And we're finding, at least some of the surveys that are out there, that people who work in independent pharmacies report far less levels of stress and feeling like they can't keep up. So that just shows you the difference there. And if it's possible, people like to find jobs there, but there are not a lot of independent pharmacies. Walgreens and CVS really conquer the pharmacy industry here in the United States. And that just means that if you can find a job in an independent pharmacy, it's even more attractive, and many people would like to find a job like that if they can.
Hey, Angelica, just before we go, I'm wondering about just the repercussions of somebody who feels like they're not doing a good job, because you end the story talking about pizzas not working. Can you explain that?
Mm-hmm. Yeah, so there's a pharmacist in Oklahoma City, Bled Snow, and she decided to quit her job at Walgreens after a pharmacy technician said to her, I feel like I can't do this. I'm so overwhelmed. I think I'm going to hurt someone. And she went to buy a pizza for them and said, wait a second, this is a problem that's way bigger than pizza. I can't do anything to fix this. And she realized herself that she felt like she was put in a position to hurt patients, right? Because you think about medication, most of us, we walk up to the pharmacy counter, our prescription is in a nice little bag, but there's a lot that can go wrong along the way, and that's what scares people.
Right, certainly not what you want to hear. Angelica, thank you. Angelica Peebles, healthcare reporter, Bloomberg News, on the phone from Boston, along with Jill Weber, editor of Bloomberg Business Week. That story in the current issue of Bloomberg Business Week magazine, on newsstands, on the Bloomberg, and at Bloomberg.com.
to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
We are counting you down to the close. Just 60 minutes left of the trading session. Caroline Hyde, Taylor Riggs, joined now by our colleagues Carol Masser and Tim Stenovic. We take you across the world of TV, radio, YouTube to decide, Carol, is this a buy the dip or is this a rebalancing trade?
I think it's a great question. Whether or not we're seeing this relief rally, you're seeing certainly investors come back into the market. I was just looking up over the past 2 days, we're up almost 6% on the Nasdaq 100, up about 4% on the S&P 500, and also on the small cap index. So, Tim, we've definitely seen investors come back to the market, but take it against the month, it's not so pretty.
Yeah, exactly. The Nasdaq Composite, for example, the star of last week and this week in terms of, on a percentage basis, one way or the other, still down right now on the month, more than 9.6%. On a month-to-date basis, it's having the worst month since March of 2020.
Meanwhile, Romain, he's on assignment just for another half an hour. He's going to be back with us for the 4 p.m. rundown. But at the moment, I'm looking at S&P 500 up 1.4%. We are seeing volumes a little lighter than usual, off by about 5% versus your 20-day average. But we are seeing a push higher, 64 points. We're up 376 points on the Nasdaq. So 2.7% rally to end this month. It takes it, though, just outside correction territory. We're down 9.5% for the month of January, and we're up 0.8% on the Dow, 266 points higher. And even the Russell 2000 catching a bid, a strong one, 2.3% higher.
Huge. You certainly see both the tech and some of those reflationary trades on a broad-based rally kind of day. This is the one-day chart, of course, that we're showing of some of the individual sectors. Discretionary up 3.4%. Technology, of course, up about 2%. Down at the bottom, though, it's still energy, healthcare, and staples. It sounds defensive, but Tim, it is still green on the screen.
Yeah, it's green on the screen. Hey, a big part of that is thanks to shares of Tesla, which are just surging today, higher now by 10.4%. On a points basis, the biggest gainer in the Nasdaq 100, Nasdaq Composite, and the S&P 500, thanks to an upgrade at Credit Suisse, upgrading it to the equivalent of a buy, writing that shares have been, quote, attractive. We got to talk about Spotify as well. Shares are higher by 12.6%. It's having the best day in a couple of years. Late yesterday, the company outlined that plan to combat COVID misinformation. This in an attempt to quell that growing controversy over its support for Joe Rogan's podcast.
Apparently that was always there, Tim. Apparently it was always in play. It's just they never told the media and they never told the user base. So, oops. Get the message out.
Well, yeah, and look, I got to tell you, raising a recommendation on Spotify to buy from neutral from Citi, that's not going to hurt either for Spotify. We're talking about this with Lucas Shaw in just a few minutes, so we're going to dig into that as well. Citrix Systems down 3.7%. You heard the news over the weekend that the news today, I should say, that Elliott Investment Management and Vista Equity Partners have agreed to acquire it for $13 billion. That's $104 a share, so not quite there. Walgreens Boots Alliance, this is the news that you saw over the weekend from our team at Bloomberg News. Shares are lower at Walgreens Boots Alliance by 1.8%, but Bloomberg did report that the company has kicked off a sales process for its Boots International Drugstore, operates pharmacies in Britain. Could be valued as much as $9.6 billion.
I know Boots well. I love Boots. Meanwhile, have a quick look at what you don't love right now is actually diversification. You need to go outside the world of bonds and stocks if you wanted to try and outperform this market, because see, a 60-40 ain't where it's at the moment. Worst loss for the month of January since March 2020. Of course, it's all about the Fed shift, a more hawkish Fed, meaning that we were sort of taking a step back in terms of both your bonds handing you some losses to the tune of, I think it was about 2.1% if you're looking at the Bloomberg US Ag Bond Index, a loss of 5%, 5.4% overall for your 60-40 index. So really, equities, bond prices both falling sharply. You needed to be in some other types of assets.
Maybe
you had to
crypto.
Look at real estate. Well, that didn't do very well either. That is a risk asset.
It's not the diversifier we thought it was.
Not digital gold quite yet, Carol.
No, not quite yet. Hey, listen, guys, this week is going to be an interesting one. It's going to be all about a lot of economic data points, largely culminating, of course, in that monthly jobs report. So largely about the employment sector. Our team caught up on Bloomberg TV with the U.S. Labor Secretary, Marty Walsh, and he said there's a lot of caveats to this report. Check it out.
The survey was done roughly around the week of January 12th. There were millions of people that were still not in work. A lot of them were out sick. Some folks were out sick. Right. And if they were not eligible for paid leave, they're going to be marked as not working when in fact they are.
All right, and of course, that's U.S. Labor Secretary Marty Walsh earlier on Bloomberg Television. So, right, we're going to be focused so much on the labor report, but I do wonder, guys, how much do we kind of ignore it until we get to next month's report, Caroline, when we get a better feel of maybe the economy coming back after the Omicron variant?
Yeah, but can we disregard what occurred in January? I feel like we keep saying these are one-off times, this is temporary in its nature, but at the moment, there are so many long-term impacts to the way in which the labor market works. And longer term, it feels like inflationary pressures. We talk about, you know, the rally of commodities we've seen for the month of January, all on an absolute tear, biggest move that we've seen in about 30 years. How much of that is going to be short-term in nature or more long-term?
And not to set us up for failure here, but if you're taking cues from Apple and the supply chain and the willingness and ability to tackle those inflationary and supply chain headwinds, it really pushes us forward to this week when we're going to get all of these big tech earnings as well. Traditionally pretty strong earnings growth. Can that continue? And do they have sort of that pricing power, Tim, when you're thinking about Meta platforms, you're thinking about Amazon, thinking about AMD, Alphabet, certainly to name a few, just as reports getting this week?
Yeah, especially the chip makers that we're going to hear from as early as this afternoon. What we're going to want to look for is supply chain elements, and if they're having the similar struggles that we heard from some of the chip makers that reported last week. From Alphabet and from Meta platforms, look, it's called Meta, but it's still Facebook, and it's still an advertising business, and it's still Instagram. How's ad revenue doing? And if, you know, when we get Snap the next day, but if we see a big drop in ad revenue, for example, or any sort of telegraphing of that from Meta, then we can watch shares of Snap move one way or the other.
I mean, it's going to be an interesting week. You know, with those big tech earnings, does it provide some momentum like the Apple release? If these companies come out, right, and certainly either come in as expected or even possibly beat, does that provide some more of a bottom for the equity market? Because at this point, Caroline, and you kind of kicked it off earlier, you know, how much of this is relief buying? How much of this is short selling covering? How much of this is just a technical oversold and we saw investors come back? How much of it sticks around because the corporate earnings are there to support it?
And that's why Amazon's going to be such a great bellwether, because it gives us a snapshot on business spending as well as the consumer. Where are we in terms of our desire to keep on purchasing via e-commerce? How committed are they to getting back into bricks and mortar as well? Because that seems to be their current playbook. But stunning to see how much we are so dependent on earnings, but also the macro headwinds, whether you're looking at tensions between Russia, the US, Europe, and indeed what's going on daily basis with the Federal Reserve. Remember, we've got the ECB and the Bank of England this week too.
And what it means for valuations, particularly when we think about all these big tech companies, it is not lost on us, Carol, that it's Goldman Sachs' David Kostin coming out and talking about the impact on valuations and the rising real yields and what that means for the drop that you see in the equity market.
I can't keep track of all of the strategists weighing in and saying buy now or don't buy now. So I'm just going to wait and see how the market, what's the new trend lines. All right, we're going to come back in about, about 30 minutes, 40 minutes here. We'll take you down to the closing bell. We'll have Beyond the Bell, our cross-platform coverage on radio and TV and YouTube. We're going to take you through today's market close.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Like we said, it's a Monday.
It is a Monday. How about that rally that we're seeing, though, in the Nasdaq?
Yeah, it's significant. But I do think, let's see what, whether those big tech earnings provide some more momentum to the upside. I still think there's a fair amount of questions. We're going to get the JOLTS job opening, so we'll get an idea of how many people still feel confident to leave their current job because they can find a better opportunity elsewhere, how much movement we're seeing in the labor force.
So jobs report on Friday, the JOLTS data we get this week as well.
Yeah,
we hear from companies like Meta, we hear Snap. Thursday, we hear Amazon.
ISM services, ISM manufacturing. We'll get an idea of terms of activity for January. So
this is going to be a good week, Carol.
There's a lot of news that might help, shape the trend line in the market environment. I think it's hard to say right now.
So do you envy the job of Jay Powell?
No, but I mean, he's got until March to figure it out at this point. He does. So we'll get through. I think, again, it's so hard when the data is muddied, whether it's from the variant and so on, to really get a clear picture of what the economy. Remember, GDP growth, that was strong before to Omicron. Right, and a lot of it was an inventory build, but it was a strong number.
It was. Hey, so what do you make of what Secretary Walsh said? Take this jobs report with a giant grain of salt because the survey was done in the early part of the month.
It says we look through it. We look through it, and the Fed probably looks through it.
Yeah.
And we wait till we'll watch those weekly jobless numbers to get an idea. They're much more relevant in terms of timing, and then we'll get another one before that March meeting, and we'll see if that's a clearer picture and if we're through the variant when it comes to the report we get in February, which is the January.
All right, 150K is what the economists surveyed by Bloomberg are saying.
Yeah, exactly. All right, let's get back to world and national news. Over to Nancy Lyons in D.C. Hey, Nance.
Thanks, Carol. Moderna's vaccine for COVID-19 has received full approval from the U.S. Food and Drug Administration for people 18 and older. It is seen as an important milestone that bolsters the shot's use as a major weapon against the virus. The Pfizer vaccine was cleared by the FDA in August. A group of progressive senators is pushing the International Monetary Fund to help developing nations deal with the COVID pandemic.
A group led by Senators Elizabeth Warren and Bernie Sanders is calling on Senate Majority Leader Chuck Schumer to support the issuance of more than $2 trillion in IMF reserve assets known as special drawing rights. That would be on top of a record $650 billion in reserves created by the IMF last August after the Biden administration backed the proposal. It had been blocked under former President Donald Trump. Last April, the Treasury Department said it would not support additional drawing rights and would only back them if circumstances justified it. In Washington, I'm Nathan Hager, Bloomberg Radio.
President Biden is reaching out to lawmakers as he mulls over nominees to the U.S. Supreme Court. White House Press Secretary Jen Psaki provided an update today.
Tomorrow, the president is going to host Chairman Durbin and Ranking Member Grassley at the White House to consult with them and hear their advice about this vacancy. Chairman Durbin has worked on 7 Supreme Court confirmation processes. The president has also worked for many years with Senator Grassley and respects his knowledge and views.
Jen Psaki is defending Biden's promise to nominate a black woman. 2 previous presidents, Ronald Reagan and Donald Trump, both Republicans, were also demographically specific in their Supreme Court appointments. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Massar, Tim Stenovic, and a couple of stories on our radar. First of all, Sony to buy video game maker Bungie, $3.6 billion deal. It is on.
Yeah, this is
space.
Look, it's this. We got to talk about the context here, right? It comes just after Microsoft said it was buying Activision Blizzard in an all-cash deal. That is valued north of $68 billion.
That's a massive deal. It's something we've talked about a lot over the last week or so, and especially as Microsoft reported earnings. But you do wonder when somebody does a big, bold move like that, so who else in the space is game? And we certainly saw it today.
Okay, so Bungie creates Destiny and the Halo franchises. I'm not a huge gamer, Carol.
Me neither.
But you know what? We were watching last week and the week before. We were talking about who becomes. I think you emailed me recently with like, it was about the Wealthfront, right? When Wealthfront got bought, it was like who becomes the next target.
But this is what, and anytime there's like just a big, bold move, right? Like you wonder, and you certainly felt this way after Microsoft did their deal for Activision. Electronic Arts shares briefly erasing their gains, but we did see it pop. And again, this speaks to what you were just talking about too. Just you look at everybody in the space and you think about, okay, who's next? Who's going to be buying? Who's going to be bought? Consolidation to be expected, especially when you have Microsoft doing that big deal.
Right. The Microsoft deal has not been approved by regulators, and there was a lot of chatter around what would happen to the games from Activision Blizzard if Microsoft chooses to make them potentially exclusive or have exclusivity windows on the Xbox platform versus Sony, or use it for Game Pass, for example, its cloud subscription service.
Right.
Sony potentially doing something similar. I don't know. Maybe content is king. I hear.
Exactly.
I heard that somewhere, Carol. Have you heard that content is king?
A little bit.
Yeah.
So we don't know, and we're gonna ask our next guest about that. We're gonna ask Lucas Shaw. But I'm just looking at some of the names in the space. Electronic Arts, as we mentioned, was up as much as 3%. It's now just down about 0.4%. If you look at something like Zynga, it is still up about 4.2%. So we're definitely seeing some names move on this news. We'll dig a little bit deeper into that with Lucas Shaw and some other things in just a moment.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got stocks off session highs, but very much in the green and holding on to their gains. 43 minutes to go ahead of the closing bell. Let's head right over to the First Word breaking news desk for today's afternoon call. And here is Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks still in the green with tech leading the way. Dow's up 132 points. S&P's gained 43, while the Nasdaq is higher by 300. The U.S. 10-year yield at 1.78%. Gold is up 7. Oil is trading higher. And Bitcoin is up by 2%. Among the main 11 S&P sectors, all were in the green, led by gains in consumer discretionary and tech. And leaders to the upside in the Dow, Boeing, and Salesforce, while Walgreens led to the downside. In deal news, Sony Interactive Entertainment to buy Bungie for $3.6 billion. In other news, Exxon is combining its chemical and downstream companies and moving its headquarters to Houston. And wrapping things up, NXP Semi reports after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master, Tim Stanovic. We are live in our Interactive Broker studio. We are streaming on YouTube, so thanks to all of you who send us tweets about being able to see us, and we love your feedback. Just going to say that.
Oh, Carol.
What?
I do too, yeah. It's good.
It's
It's
really
happy
cool.
Monday, everyone. You know, we're having a little case of the Mondays in here.
Oh my God, I am like such Monday brain. And our most read story, and we're going to talk a little bit more about this, but has to do with Joe Rogan and apologizing amid a vaccine controversy on the very popular music streaming platform, Spotify.
Lucas Shaw is entertainment reporter for Bloomberg News. He joins us on the phone from LA. Lucas, you've been all over this story. I saw your tweets and stories over the weekend. I think a lot of people are caught up to speed to a certain extent, but I kind of want to start with the basics here. What exactly did Joe Rogan do that got Neil Young and others so upset?
Joni Mitchell.
Joni Mitchell as well. Brene Brown.
He has kind of routinely during the pandemic expressed some skepticism about, shall we say, the conventional wisdom with regard to vaccines and masks and all sorts of health protocols, and has also hosted many voices dissenting kind of from that conventional wisdom. The most recent of which that caused this uproar was this Dr. Robert Malone, who got a patent for helping to develop mRNA vaccines back in the late 80s and early 90s, but who has since become quite critical of how the vaccines have been rolled out, and particularly kind of adding boosters and just both the speed with which we're approving these vaccines and the frequency with which we're sticking them in people's arms. And that led at first to some doctors rebuking Rogan and Spotify, and then to Neil Young and Joni Mitchell pulling their music.
So, you know, we've been talking about this a lot, Lucas, in the newsroom. I mean, is this about freedom of speech and being able to have a platform where you present different points of view? Is this about Rogan embracing it, certain perspectives? What is this about? Or is this about the spread of misinformation in general, which we know platforms, social media are really under the gun right now because of that?
So it doesn't really have anything to do with free speech, because it's not the government. Spotify is a company, is a corporation that can host whichever views it does or does not want. There are certain ways that it shouldn't discriminate, but it could have Joe Rogan or it could not. It does tie in a little bit with some of the debates about misinformation and platforms that we've seen on Facebook and YouTube and Twitter and others, because there is a lot of misleading information across a lot of these different podcasts. But this is different from those in that Spotify paid Rogan a lot of money to be exclusive to its platform. You know, this is a little more akin to a relationship between a SiriusXM and Howard Stern, or Fox News and MSNBC and its host. You know, Rogan is one of Spotify's stars. So while Spotify does have that kind of platform approach, and a lot of its communication in trying to defend against this was shifting the narrative to being about that, we should make no mistake that Spotify has hitched its wagon to Rogan, and it wants to keep being in the Joe Rogan business.
So let's talk about potential business implications here. Is it a big deal that Joni Mitchell, Neil Young, and have pulled their music, and Brene Brown has said she'll stop making podcasts until this is resolved?
The Neil Young and Joni Mitchell in isolation are not a considerable loss for Spotify. The two of them combined are, about as popular on a monthly basis as like Fetty Wap, less popular than Nickelback. Neither one of them ranks among the top 500 artists on Spotify, at least based on the numbers that Spotify puts out. The risk is really if that boycott and that frustration spreads. So you mentioned Brene Brown. She said she was going to stop uploading her podcast. She did not clarify why, but let's say Joni Mitchell, who is an inspiration to a lot of current female singer-songwriters, inspires a Taylor Swift or someone of that ilk to pull their music. If Neil Young inspires some contemporary rock star to pull their music, that then becomes a very big deal, not just for Spotify, but for its partners. You have to keep in mind that the big music companies, Warner Music Group, Universal Music Group, Sony Music, they have no interest in pulling their music from Spotify because they make a lot of money there. And so everybody has a vested interest in trying to sort of negate future boycotts. The challenge for Spotify is it needs to find a way to do that without actually punishing Joe Rogan in any meaningful way because of how important he is to them. He's far more important to Spotify than any of the musicians who've boycotted thus far. And you could argue as are more important than just about any musician anywhere.
Yeah, and what did Spotify lose in market cap? Wasn't something like $4 billion on this controversy?
I'm pretty skeptical to assign any of the fluctuation in Spotify's share price to this. There could be a link, but Spotify's share price had been in decline basically for the last year as investors got more skeptical about the podcast push. And so Spotify's share price suffered a little bit last week, like a lot of the kind of tech companies or tech media companies that fluctuate with the market. And you see it again up considerably today on a good day for those types of companies. Could the Rogan news be influencing it more in one direction or another? Absolutely. But I've been very reluctant to assign any real value to what's happening there.
Lucas, just about 30 seconds left here. Should we anticipate that there'll be more policing, though, of Spotify podcasts? Like, what's just quickly?
Yeah, I think that the policy that they put up Sunday will be one that they constantly tweak and revisit, and we'll have a lot of conversations about misinformation in podcasting in the months ahead.
All right. Wish we had more. Lucas Shaw, thank you so much. Really appreciate you weighing in. Entertainment reporter at Bloomberg News on the phone from Los Angeles. We are seeing shares of Spotify certainly rallying in today's session, but they did get an upgrade also.
Yeah, from Citi.
So there's been a couple of things going on.
Hey, now it's all clear.
Yeah. Is it?
Yeah.
Is it?
Oh, that was helpful.
Lucas, always helpful. All right, you're listening to Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, folks, it is Bloomberg Business Week. You are watching on YouTube. You're listening on Bloomberg Radio. Coming up, we're going to do the chart of the day.
Yeah, Kriti Gupta is going to be joining us in just a few minutes. She's also going to give us the story that she's got her eye on, Carol.
Yeah, exactly. We're going to talk energy and we're going to talk something else.
I'm ready.
Something else.
I'm ready.
Emerging markets, in fact. All right, first up, though, let's get back to your top business stories. Watching the U.S. trade for us, Charlie Pellet.
All right, thank you very much. 28 minutes to go ahead of the closing bell. Stocks higher, the Dow, the S&P, Nasdaq, all advancing. Those dip buyers coming back into the market after last week's central bank jitters. Also volatility during the corporate earnings season. Most S&P 500 companies, by the way, have been meeting or beating expectations. After the bell today, among the companies reporting, we will be hearing from Cirrus Logic and NXP Semiconductor. S&P up 57 now, up 1.3%. The Dow up 231, up 0.7. Nasdaq up 352. That is a gain of 2.6%. 10-year down 430 seconds. 10-year yield 1.78%. Spot gold up 0.3. 17.96 the ounce. And West Texas Intermediate crude up 1.8%. 88.38 a barrel. The number of infections among athletes and team members in Beijing for the Winter Olympics continues to grow as the games draw nearer at an even faster clip than the Tokyo Games last summer. In the U.S., Dr. Joshua Sharfstein is vice dean at the Johns Hopkins Bloomberg School of Public Health. He told us this morning he is encouraged by the improvement in the COVID numbers, but he is warning against complacency.
The value of vaccination again proved itself during the Omicron wave. So we have tools to protect ourselves, and we have to keep going. So just because it's going to fade into the background in our lives, the more we are smart about, protecting ourselves, preparing, the more it'll fade into our lives. It's not just by ignoring it altogether that we get that benefit.
Dr. Sharfstein with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking some of the vaccine stocks that we track every day at this time. Pfizer down 3%. Its German partner BioNTech, its ADRs up 5.3%. AstraZeneca's ADRs down 2.1%. Moderna up by 5.8%. J&J Johnson & Johnson up by 0.6%. Briefly, in the video game industry, a couple of weeks ago, it was Microsoft acquiring Activision Blizzard. Today, Sony Interactive is buying Bungie for $3.6 billion. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, as we do each day at this time, we bring in Kriti Gupta, markets correspondent for Bloomberg. She joins us on the phone from New York City. Sign up for Kriti's Chart of the Day. You can do that at kgupta129@bloomberg.net. Also, check out her on Twitter, her Instagram. You can find that at Kriti Gupta News. Kriti, your chart of the day today focuses on West Texas Intermediate versus Brent crude and the spread between the two. Why'd you choose this?
All right, folks, we're going to try and get Kriti just a little bit of a technical problem there. What's interesting about energy overall, if we look at the outperformance in terms of the equity markets in this first month of 2022, energy is at the top of the list. It's up about 19-20%.
I think I hear Kriti.
I hear her dulcet tones.
Yeah, I can. What happened?
That's okay. Kriti, can you hear us?
Yeah, I did. Hi, I can.
Oh, okay.
It might sound like there's kind of a delay, but
we're making the
gonna work with
sausage,
this.
folks. This is live broadcast. This is what happens. So, Kriti, come on in. We're so glad we've got you. Tell us about your chart of the day. Tim said he's been curious about this, the spread between WTI, West Texas Intermediate, and Brent crude.
Yeah, well, so this is something that I used to look at very, very closely during the trade war back in 2018. The idea about how much geopolitical risk is actually priced into the oil market, because sometimes markets aren't perfect. So today I decided to look at the spread, Brent versus WTI, and Brent is actually at I think $3.47, if my memory serves me correctly.
That's right.
Higher than WTI. So that's going to be a really crucial piece of the equation, because it means that the spread between the two is widening. Now, for context, a normal spread between the international benchmark, which is Brent crude, and the American benchmark, which is WTI, is usually about $2. Brent is usually about $2 more expensive. But what happens when it gets closer and closer to $4, that $4 gap, which is kind of what we're nearing right now, you start to see it affect international trade. It means that American refiners, the folks that buy oil and then turn it into gasoline for our cars or jet fuel for our planes or whatever, they decide that they're not actually going to buy international crude anymore, whereas refiners abroad who do the same thing for countries like Japan, South Korea, India, they go and they buy American crude. And what it ends up doing, because there's such a discount, is it changes the export-import balance for the United States. Why this matters, Carol, this is just for you. Why this matters is because the U.S. hasn't been exporting a lot. Since the pandemic, exports have actually dropped quite a bit. Instead, they've been importing way, way more. And that's created this kind of I don't want to say deficit, but a trade deficit essentially between the United States and the rest of the world. And if you start to see the spread hit $4 or even go further because of the geopolitical risk going on in Russia, Ukraine, even somewhat in the Middle East, that could actually help the United States in getting some more of those exports out.
What's also interesting, too, right, it could help out potentially Europe, I think, as we're watching the tensions between the world and Russia over Ukraine. Europe counts so much on Russia, right, for certainly energy supplies. So this could be potentially a way for them to maybe buy elsewhere, although maybe that's too simplistic.
No, I think you're 100% right. And this is something that we heard from today, actually, from the White House, right? Joe Biden met with the Qatar Emir to discuss these exact things, these flows in the commodity space. So I think you're bang on with that.
All right, so let's talk about, that's an interesting one. And then there's something on the emerging markets.
Yeah, Creedy, I want to get your thoughts on why you chose this story today for what you got your eye on. Mexico follows Brazil into recession with quarterly decline. Watching another emerging market.
Yeah, because it used the word recession in the headline, right? We just came out of a recession. It's kind of crazy to think that there are countries in the world that are going back into it. But the reason I chose this one is because, I mean, we're talking about recessions, right? The idea of rate hikes, the idea of will the economy continue to grow as quickly as it did in the last 2 years? Well, for Mexico, that's actually kind of been front-running some of these rate hikes in a way that the Federal Reserve, the ECB, the BOE hasn't yet. Well, they were trying to tackle inflation, and they have employment back up, they have exports up. The country is actually kind of making money, but because they hiked up rates so quickly to tackle that inflation, they actually ended up sending their economy, their services economy in particular, back into recession. So a second quarter of negative growth. So the reason it caught my attention was it's kind of a cautionary tale, right? And if you start to hike rates really quickly to tackle inflation, it's not a guarantee that it's going to work.
Well, and they're such a major exporter. You do wonder how much the virus has played into their inability, right, to meet all the demand that the world has out there and get the goods that are so often manufactured in a market like Mexico out to the rest of the world. We'll see if that starts to change, certainly over the next few weeks and the next month. Creedy, great stuff. Creedy Gupta, she's Bloomberg Markets correspondent here, and she's, of course, joining us on the phone.
Well, let's get to Washington, D.C. for a check of the latest world and national news. There we'll find Nancy Lyons standing by. Hey, Nance.
Thanks, Tim. President Biden will welcome Senator Dick Durbin and Senator Chuck Grassley at the White House tomorrow to discuss the Supreme Court nomination process. White House Press Secretary Jen Psaki says the president is not wavering from his promise to nominate a black woman, despite pushback from Republicans who say demographics like gender and race should not play a role.
President Reagan promised the country he would nominate the country's first woman to serve on the court, and he did so. Former President Trump also promised to choose a woman just over a year ago, and there was no such complaint from the voices on the right who are speaking out now.
Psaki says Biden's choice will have impeccable credentials. The U.S. and Russia have squared off at the UN Security Council, where Moscow tried but failed to block a public hearing on its troop buildup near Ukraine. Russia's UN ambassador accused the U.S. of hysterics, but U.S. Ambassador Linda Thomas-Greenfield shot back.
This is not about antics. It's not about rhetoric. It's not about U.S. and Russia. What this is about is the peace and security of one of our member states.
Thomas Greenfield says the public hearing was needed due to the lack of progress in closed-door sessions. British Prime Minister Boris Johnson is pledging to make changes in his office after revelations of rule-breaking parties during lockdown.
Firstly, I want to say sorry. And I'm sorry for the things we simply didn't get right, and also sorry for the way that this matter has been handled.
Johnson says he'll have more to say in the coming days about improving the operations of 10 Downing Street. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. You are listening to Bloomberg Radio, Bloomberg Business Week here. And a story that definitely came up on our radar is about the top banks, global banks, the top 20 global banks by assets. They have been boosting female board members in 2021, led by one specific bank.
Yeah, Citi is the bank that you're talking about, Carol. Let's go through some numbers here because they tell a pretty good story. The percentage of female directors on the boards of the top 20 global banks by assets rose to 30.3% at the end of 2021. That's up from 28.5% a year earlier. This all according to Bloomberg data.
Right, top of the group is Citigroup. They had the highest percentage of female directorships at 53.3%. I always want to know what that 0.3% individual looks like. Credit Agricole has the most women on its board at 10 specifically. So if we go by, let's just go through the list. Citigroup, the size of the board is 15. 8 of them are women. BNP Paribas also has 15 on their board, and 7 are women. Let's look at some other big ones. JP Morgan, let me just see if I can go across. They've got 10 board members. 4 of them are women.
Yeah, Goldman Sachs has 13 board members. 6 of them are women, so that brings in at 46.2%. If you keep going down the list, you'll find some pretty familiar names on there. You can see that Bank of America, for example, about halfway down, has 38.5%. That's a 16-person board with 6 being women.
And regionally, Europe led with the highest average percentage of women on boards, while China had the lowest by average age. Japan had the highest average age of board members, while Europe had the lowest. So this is really a dicing and slicing. You know, when we talk about ESG, this is something that you can very easily measure in terms of diversity and inclusion. It's governance, right? It's in terms of really figuring out how many are on a board or how many are in the C-suite. These are numbers you can quickly and easily identify.
There's also some really interesting age data on this. Details of the ages of board members can be found in this story on the Bloomberg Terminal. Bank of America, the average age of someone on the board is 68.6. Bank of China, 55.5.
Yeah, it is interesting to see this. Anyway, a great ranking. We're going to talk a little bit more about this as it pertains to ESG. We'll get to that in our 4 o'clock hour. You're listening to Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. The Dow, the S&P, Nasdaq holding close to session highs. S&P up now by 66 points, a gain of about 1.5%. The Dow up 294, up by about 0.9%. Nasdaq up by 399 points, up 2.9%. Final trading day for the month of January. For the month, the S&P is down 5.6% this month, this January. Nasdaq is down 9.4%. The Dow this month down 3.6%. 10-year's down 4/30 seconds. 10-year yield 1.78%. Spot gold up $7 the ounce, up 0.4%, $17.98 the ounce. While West Texas Intermediate crude is up 1.7%, $88.28 a barrel. Briefly after the closing bell, among the companies reporting earnings, Cirrus Logic. Cirrus up now by 4.6%. Tesla is jumping towards its biggest rally in about a month after Credit Suisse Group upgraded the shares. Tesla up now by 10.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg Editorial Board. With Democrats unable to advance their comprehensive voting rights bill through the Senate, they should now turn their attention to more pragmatic concerns. A good place to start would be overhauling the Electoral Count Act of 1887. This outdated law opens the door to partisan interference in the electoral count certification process. Lawmakers of both parties have already expressed support for reforming the ECA, and negotiations on the matter are ongoing. Notably, these talks have the approval of Senate Republican leader Mitch McConnell. Understandably, Democrats are frustrated that their broader electoral reforms aren't going anywhere. But given the reality of a sharply split Senate, fixing the Electoral Count Act would count as real progress on its own. This editorial was written by the Bloomberg Editorial Board. For more Bloomberg opinion, please go to Bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just got about 10 minutes left in today's trading session, getting ready to wrap up the month of January. What a month it's been. Let's see what our next guest has to do. Tracy Mcmillian is with us, Head of Global Asset Allocation Strategy at Wells Fargo Investment Institute, joining us on the phone from Winston-Salem, North Carolina. Tracy, nice to have you here with Tim and myself. January was an interesting one, a rough one. Does it tell you or indicate to you anything about what maybe is to come, at least for the month of February?
Yes, thank you for having me this afternoon. So what we're seeing today, we think, in this recovery is probably traders covering some shorts here, but we're also seeing some investors coming in and buying this correction. That said, we're not so sure that a short-term low is in. A lot of times when we see the 200-day moving average breached with conviction, we'll see a rally like maybe the one that we're seeing now, and then a bigger drop before prices can start to move higher again. So, what we've seen so far this year, this month of January, is a correction that happened really quickly. But, this type of movement in markets is normal. What was not normal was what we saw last year, a steady march higher in the market.
Okay, so, yeah, we know, it's a lot different than we saw versus last year. I'm wondering, though, about how this makes you think differently, potentially, about asset allocation and how our audience needs to understand the wild swings that we've seen in markets in terms of how they should be investing.
Sure. So, you know, it goes back to the basics when you're thinking about asset allocation, and those basics of understanding your time horizon and your risk tolerance and your comfort level with these types of corrections and displacements in the market. So if it was something that caused investors to feel uncomfortable, then it's time to revisit that asset allocation and look at how much is in equities and how much is in fixed income. Use that fixed income very defensively as you know, that is the component of the portfolio that will provide some stability to the overall investment.
Tracy, Tracy, is it safe to say that you think a recalibration of the market is happening right now? As you said, what wasn't normal was the steady rise higher in stocks last year. So what we're seeing is a recalibration right now.
That's exactly what we're seeing. We, like others, have had to adjust our forecast for Fed tightening this year. We went from 0 rate increases to 2, and now we're at 4 rate increases that we're expecting. So, you know, we're looking at the inflationary numbers. We're looking at the communications out of the Fed, and what everyone is having to do is to pivot their positioning to accommodate a tightening cycle that is happening more quickly and to a greater magnitude than you know, we thought really just a month ago.
How much, though, of the run-up, as you said, the abnormal run-up that we saw in stocks last year that didn't make sense was a result of so much money being pumped into the system, courtesy of the Fed in a big way, but also the federal government. And as all of that goes away, or largely goes away, or stops to go away, and the expectations of it definitely goes away, how much of that, though, again, unprecedented numbers. We haven't been here in this world before when we've seen as much money pumped into the system as we did last year during the pandemic, or over the last year or so. So how much of that, how much of a recalibration then is correct in kind of getting us back to normal? Is it 10%? Is it 20%? Is it 30%?
Yeah, so obviously last year was an exceptional year. The year before that was an exceptional year as well. And so, you know, what we're thinking now is that we are probably still seeing a correction within a recovering market cycle. And so what that means is that absent a recession, and we don't think we are headed to a recession at the moment, but absent a recession, the way that you want to be positioned is to continue to add to your equity allocations within your strategic positioning during these periods when we see market drawdowns. Our thinking is that we could see 5,100, 5,200 on the S&P 500 by the end of the year. So that is, you know, 16 to 18% upside from where we are now. So that to us is attractive relative to fixed income.
Okay, so what are the macro catalysts that get us there?
Yeah, there are a number of drivers. So obviously, we think growth is going to continue to be higher than average. So we're going to see relatively strong growth this year, 4+% strong growth. Earnings growth, we think, is also going to be strong this year as the consumers are not tapped out. So they're just taking an Omicron break at the moment. But they still have plenty of dry powder, and we think that that is going to continue to push earnings higher this year. And it's
what kind of earnings growth are you expecting?
That we think.
What kind of earnings growth are you expecting this year?
235 on the S&P 500 is our per share forecast for this year. So if we assume about $200 for last year, 235 this year, that's double-digit earnings growth.
So 20% or more, or 15% or more? Forgive me, I'm not doing the math quick enough.
Yeah, about 15.
15%. Okay. Which would certainly be not a bad year. Interesting. Favorite? Do you have a favorite sector? Just got about 20 seconds here.
Well, we like information technology, especially at these prices. We think earnings and revenue growth are going to continue to be attractive over the next 6 to 18 months. Even though rates have weighed on them some, we think that they don't have that much further to go this year.
Yeah, and certainly an area of the market that we've seen that has taken a fair amount of beating. I was just going to pull it up on my Bloomberg. Information technology, it's your third worst performing group in the S&P 500, major industry group. It's down about 7% so far here in 2022. Hey, Tracy, thanks so much. Tracy Mcmillian, Head of Global Asset Allocation Strategy at Wells Fargo Investment Institute, on the phone from Winston-Salem, North Carolina. She sounds pretty upbeat, though.
Yeah, she does. 16% on the S&P 500 this year. Wow.
Yeah, that would be a move up.
Fourth year of double-digit increases.
Yeah, let's see if we'll bring it up with our team. Coming up next, we're going to be joined by our Bloomberg TV team for Beyond the Bell, live on radio, TV, and YouTube. We're counting you down to the close on this Monday.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day, of the trading month. Romaine Bostic, Caroline Hyde, Taylor Riggs counting you down to the closing bell, here to help take us beyond the bell. It's our global simulcast with Carol Masser and Tim Stenovic. We welcome in our audiences across Bloomberg Television, radio, and YouTube. And happy Monday, Carol. Looking at a market right now, higher by 3% on the Nasdaq, 3% on the Russell, and more than 2% on the S&P.
We've had quite a rally in the last couple of days. A lot of investors coming in, buying the dip. I mean, it is broad-based buying, Tim, that we are seeing in today's session.
This is the 10th day in a row that the S&P 500 has moved at least 1% in either direction. So it's not just you that's tired, guys. The S&P 500 has done a lot of work.
This is energizing, Tim. Energizing.
Yeah, it is energizing.
I don't get paid for
this. Is rebalancing, folks. Should we talk technicals? But we're seeing the best two-day rally on the Nasdaq since April 2020, when it moved some 7%, currently up 6.6% over those 2 days. Amazing.
Well, and Tim was talking about some of the big moves that we've seen consecutively of 1% or more on the S&P. It is the terminal that we love when we talk about the Nasdaq has had 1% or more moves in either direction, and now 14 of the 20 January trading days.
Wow.
It has been really big moves in tech.
And all of that, and it's still down 11% here from its all-time high. On a positive note, the S&P 500 did actually break above that 200-day moving average. If you follow technicals, that's a positive sign, right?
Well, so how much of the move up is a technical move, right? And then if we start to see some negativity come back into the markets to the downside, technically, do we see another move down? It's volatility, guys.
Yeah, that's an understatement here. A lot of volatility, and a lot of folks predicting volatility ahead. For today, the Dow Jones Industrial Average looks like it's going to finish higher by about 1% here on a monthly basis. It's going to be down by about 3%. The S&P 500 going to finish the day right around 1.9%, back above 4,500 on a monthly basis. It's down about 5%. The Nasdaq Composite higher by about 470 points, or 3.4% here on the day. On the month, though, it is down about 9% and down more than 11% from its all-time high. Now let's check the Russell 2000, which is, I guess, a relative outperformer here on the day, higher by about 3%. On a month, though, Carol, it's down about 9.7%.
Yeah, it makes you wonder who's got it right. Is it what the month showed us, or the last couple of days? Is this creating a new trend line into February? We'll see. As for the VIX, down almost 3 points in today's trading, but nonetheless, we continue to see that move around as much as we do the overall financial markets down.
And Carol, it is pretty unbelievable. I think the chip makers, the SOX index is what, 5.25% higher on the day. Mm-hmm. That really reads through to some of the individual sectors that we're looking at on the S&P 500. It's semiconductor equipment up 4.6% on the day. Autos and auto components are up 8.8% on the day. It is pretty incredible. There's a lot of technology and utilities as yields are climbing. That's up in here. There's a lot of green, even on some of the loser boards as well, but there's still two sectors, at least on the day, that are in negative territory. It's food and beverage, and of course, household and products. So that could be some of the defensiveness maybe that we're seeing the rotation out of and back into these cyclical risk-on trades.
Yeah, let's talk about some of the trades, certainly to the upside. There were a lot of gainers to choose from. I kind of put together almost a mini Cathie Wood portfolio here for you. Net Netflix
What's
among
your
them.
expense ratio?
Oh, details. All right, Netflix up about 11% in today's session, continuing to get some love. It was Bill Ackman last week who was buying in. We saw the co-CEO, Reed Hastings, also put in about $20 million into shares. Well, Citi raising its recommendation on both Netflix and also Spotify, which also gained about 13% in today's session. So Citi liking it, rallying on an upgrade. We do know one of the big stories, too.
Well, I just think this is interesting that you chose these stocks. I mean, because you talk about the rally. I mean, Netflix, of course, the second worst performer in the S&P 500 on a year-to-date basis.
That was yesterday.
But, well, as of today, Carol, this is the end of the month. So January 31st, it's the last day to say Happy New Year, by the way. But down second worst performer. But it gets to the high idea of dip buying and the idea that if the valuations come down so far on names that have legitimate growth, legitimate cash flow, that maybe, you know, 11% decline in a month, a 29% decline in a month for Netflix, maybe that's a reason to buy back in.
I mean, Bill Ackman certainly thought that was the case
Well,
last
this is a
week,
company,
and Reed Hastings as well.
And this is a company with about $33 billion in revenue projected. We're talking about earnings growth, both on the top and bottom line.
So I would point out that none of the names you have on your screen are the top performers in the month on the S&P 500.
Well, that's not what my mission was.
Oh.
It was for me to
I missed
just
the
pick
meeting.
gainers that I like. All right, I'm going to go to Robinhood. Don't you have an editorial board meeting to go to or
That's
something?
over.
All right.
He's back.
Robinhood up about 11%. Kathy Wood stepping up buying Robinhood on Friday as it dropped to a record low. She bought about 2.5 million shares. And then Tesla, it was up almost 11% in today's session, topping the S&P 500 and the Nasdaq 100. Credit Suisse upgrading the shares to a buy with technical signals pointing to more gains, so getting a lot of love.
Not from POTUS, though.
What?
Not from POTUS. That's who Elon Musk wants attention from, right?
Exactly. All right. I'm done. I'm
let's see what Tim has.
I'm out.
Maybe
Mic
his,
drop.
Are
his
you wearing a
invitation was
turtleneck, too?
lost in the mail. What did you say, Romaine?
Carol has a lot of turtlenecks.
I'm kind of like, you know, those tech billionaires. You open up the closet and all it is turtlenecks.
Just a uniform.
Yeah, it's exactly. It makes my life
Right, her
easy in the
brain,
morning.
you can't have any brain power expended.
Some of us wear flowers on our lapel often. I just wear turtlenecks a lot.
Hey, I got to talk to Kleiners here because Taylor said that
Rough on this Monday.
even on the losers board, there was a lot of green, and I'll say it's no easy feat to find a Kleiners making moves today. Walgreens Boots Alliance shares finishing the day down by 1.4%. Bloomberg reporting over the weekend that the company has kicked off the sales process for its Boots International Drugstore. Well, does that mean so it'll just be Walgreens if Boots is no longer around?
Caroline
is a fan.
Caroline says she only goes there because it's called Boots Alliance.
Everyone goes to the Boots.
Crosstalk. We're going to get in trouble for crosstalk.
All right. Citrix Systems down 3.4% on the day over that potential acquisition.
I'm cranky. I am cranky. I asked Tim. I came out and I said, I'm cranky today.
You got to eat more cornflakes because that's the problem with Kellogg's right now.
Why?
Okay? It got a downgrade based on the U.S. cereal business. BMO Capital Markets is concerned. So
do people eat cereal anymore?
I did.
I'm a big cereal person.
I have Cheerios every
We all
morning.
had cereal upstairs, except for you.
I did not.
Good for your cholesterol, Cheerios.
I had a bagel.
Yeah, I had my Rice Krispies this morning. That's definitely a Kellogg's number. Meanwhile, I'm looking at what's been happening.
Sounds healthy.
This has been an extraordinary month for commodities. That is what we need to be focusing our eyes on, because I'm looking at WTI crude, $88, Brent crude, $89, biggest move on a monthly basis in 30 years. This is your inflationary pressure that Kellogg's has been talking about. Actually, wheat has been coming down on the day as many has felt maybe the Russia-Ukraine issue isn't going to be as difficult for some of the soft agriculture that they produce. I'm looking at natural gas, though, having a phenomenal day on the back of that winter storm that we had over the weekend. And indeed, of course, the supply side issues that we continue to see. Iron ore getting a bid after it's been, of course, somewhat beaten up over in Asia. China maybe sort of pulling back some of the reins on that. I'm looking also at a story that the commodities, the oil manages do too well, even when we see a very strong month for the dollar. Today, the dollar index just pulls back somewhat, 0.6% lower. It is higher on the month, though, but we therefore catch a bid for those commodity-related FX pairs. Aussie dollar up 1.1%. We also see the euro maybe catching a bid. The traders are really trying to bait the ECB and the BOE ahead of their all-important central bank meetings this week. And sovereign bonds, I mean, selling out across the board. It was a really move out of German debt, Danish debt, French debt over the course of the day, Taylor.
It was unbelievable. Caroline, when you talk about the course of the day, let's look at the course of the month for full faith and credit. The 2-year yield is really what we want to draw our attention to, given Raphael Bostic over the weekend saying maybe a 50 basis point hike in March isn't totally off the table. This is for the month. Take a look at this. You've had a 45 basis point move in the 2-year yield. You've just had 6 weeks of back-to-back moves, the biggest yield increase that we've had now going back almost since October of 2019. Yeah. So this is the rate of change. This is where we're having all conversations about valuations, the discount rate, the pressure that that's putting on valuations on the front end.
But it's also, what?
Well, I mean, just real quickly to Taylor, I mean, we saw 121 basis points at one point on the 2-year yield earlier today, but we're not seeing those types of moves necessarily in the long end. And I'm wondering, when does the flattening of the yield curve become a problem?
When it inverts.
And Carol, you've seen a lot of that. I think we were talking with the guest here, 60 basis points on the 2s, 10s. Today there's a little steepening, but overall the trend has been flattening. Is maybe we're looking at slowing growth, slowing inflation, which is why maybe the Fed, as strategists are thinking, want to front run the rate hikes in the beginning of the year in anticipation of cooling in the second half.
Couldn't they have done that last week?
Well, no. Powell said he couldn't because he told everyone he'd wait till March.
Oh, okay.
Don't you think he has
that's
to
a long
wait?
time away.
But doesn't he have to wait to March? We don't.
No, he doesn't.
We're already talking about looking.
No, we've had surprise
They're
moves
still buying bonds.
outside the meetings before. And here in the U.S. too.
There is a chance that they overshoot. And I do think that they're using a lot of Fed speakers to kind of manage the environment and manage the psyche so that the markets actually do some of the Fed's work.
Yeah, half a point, anyone? Did we all hear about that over the weekend?
Is the Bank of England raising rates?
Apparently, already did.
Yeah.
They shocked the market in December by going when everyone thought they guided the market to think that they would stand pat and then suddenly pulled that one out the bag. But
that's called flexibility.
Yeah, but no one liked it very much. They felt there was all this talk about them being unreliable boyfriends all over again. And this is why we want to see a steady hand, the sort of consistent messaging coming from Fed Chair Powell.
I thought Draghi was on.
They're all unreliable.
Taylor.
Their speaks experience.
They all speak a lot and try to guide us through this. All right, lots to go. Thank God Monday's almost over. I'm looking forward to Tuesday, everybody. Let's go get some cereal.
I'm going to do a full show tomorrow just for you, Carol.
Promise? Yeah. I look forward to it. All right, that's going to do it. Folks, that'll do it for our cross-platform coverage on radio, on TV, on YouTube. That's going to get us to Tuesday, and you can catch us same time, same place on Tuesday.
You're listening to Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
I like to warn the world when I'm cranky.
Well, you kind of fooled me. This is all good.
I think I was apologizing to you early in the morning when I was like, rawr.
It's all good.
Okay, so interesting day. A lot certainly to come. There was one stat that came to my attention. We're going to have a lot of economic data points, but we are seeing a lot of companies in the S&P 500 meeting or exceeding expectations when it comes to profits.
Yeah, stock though, how's it reacting?
Well, in the last couple of days, certainly much more to the upside. Let's get back to World and National News. Nancy Lyons, take it away.
Thanks, Carol. President Biden says we are ready no matter what happens in Ukraine. Well, the UN Security Council today discussed Russia's encroachment with the U.S. ambassador to the UN, Linda Thomas-Greenfield, saying it is an issue of security.
Imagine how uncomfortable you would be if you had 100,000 troops sitting on your border in the way that these troops are sitting on the border with Ukraine.
But the Russian ambassador to the UN, Vasily Nebenzia, refuted Thomas Greenfield's concerns. He speaks through an interpreter.
We fully understand that the desire of our American colleagues to whip up hysterics.
The UN debate is happening as the U.S. and European Union finalize a package of potential Russian sanctions. Lawmakers are back in Washington with less than 3 weeks until the February 18th government funding deadline and no agreement on a spending bill.
A short stopgap measure may be necessary again, even as negotiators are starting to make some progress, but there's still no agreement on even the most basic parameters of a spending bill. Appropriators still hope to pass a spending package before the February 18th deadline. They do need an agreement on some high-level issues, like how to approach policy riders and top-line figures for defense and non-defense spending. And if they don't make that deadline, President Biden's State of the Union speech on March 1st could be a motivator. In Washington, I'm Amy Morris, Bloomberg Radio.
President Biden will be meeting with Senate Judiciary Committee members tomorrow to discuss the Supreme Court vacancy. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. Gotta love Tim Stenovic. I just want you to know, world, if you don't know by now, he's probably one of the nicest folks I've ever worked with, but he's also got a really fun, dark sense of humor sometimes, or a little edge.
I think that you said the real show happens during the breaks. When, of course, we are, we're prepping for our next segments.
I'm like, what's next? He's like, a Phil?
Yeah.
Okay, so what are we going to do? We're going to talk about, Exxon.
Yeah, let's talk about Exxon.
They're making some moves.
Yeah, they are. They're moving the quote-unquote God Pod, the headquarters.
Did you know that that's what it was called?
I had no idea that it was called this.
What is the God Pod?
It's the headquarters. They're moving it to Houston.
Okay, and I guess that's what they call it. Yeah, to the Houston area from near Dallas, and combining its chemical and refining divisions in a major shakeup aimed at reducing costs. If you think about one of the big corporate trends right now, safe to say that companies are really looking hard at their businesses, streamlining it, and really focusing on the areas that make the most sense or maybe are the most growing. But they're definitely like honing it and just really focusing businesses so they're not scattered all over the place.
Yeah, exactly. You hit it right there, Carol. This is all about a reorg. So the top executives who've worked out of this famous God Pod office park in Irving for more than 3 decades, they're going to make the move about 230 miles away. It's to the southeast by mid-2023. This according to a statement that Exxon put out today. And here's the reorg news. They're going to reorganize the company along 3 main business lines. Upstream produces oil and natural gas, of course. Product Solution, which makes fuels and chemicals. And then also its low-carbon division.
Yeah, change is going to take place from April 1st. The headquarters relocation will be completed by mid-2023. Keep in mind, backdrop, Exxon definitely has been on an aggressive drive to cut their costs over the past few years. It's on track for $6 billion of savings by 2023 compared with 2019 levels, or enough to pay for about 40% of its dividend. God Pod, a large tree-lined office park in Irving, west of Texas.
I did not know it was called the God Pod. It could be Mothership.
I'm speechless. That doesn't happen often. The Mothership.
Yeah, exactly.
Yep.
Hey, you mentioned the outperformance of oil. The S&P 500. Exxon is one of the top S&P 500s for performers for 2022.
Those energy names have been on a tear this year.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. NXP Semiconductors going to be buying back shares up to $2 billion. NXP Semi shares jumping 4%. Its first quarter revenue view did beat analyst estimates. A move higher today for the Dow, the S&P, and Nasdaq, wrapping up a volatile month. It is on to the trading month of February. We saw a rally today. Dip buyers emerging from last week's jitters on central bank policy. S&P up today by 83 points, up 1.9%. Now for the month of January, also year to date, the S&P down 5.3%. Nasdaq, what a day out there, up 3.4% today, up 469 points. The Dow up 406, up by 1.2% for the month of January. The Dow was down 3.3% for the month of January. Nasdaq was down 9%. Tenured on 230 seconds, 10-year yield 1.77%. Spot gold up today by 0.4%, $17.99 the ounce, while West Texas Intermediate crude oil today up by 1.7%, $88.33 for a barrel of WTI. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, to call it an explosion is to put it mildly. Bloomberg Intelligence reporting just about a year ago, Tim, that global ESG assets are on track to exceed $53 trillion by 2025, representing more than a third of the $140.5 trillion in projected total assets under management. It is a lot. We know tons of money has been pouring in.
It is, but what does ESG mean? And that's a big question.
Right, we're still working out in terms of how to measure it and really the transparency.
Well, here to help us do that is Sarah Bratton-Hughes, head of ESG and sustainable investing at American Century Investments. She joins us on the phone from New York City. Sarah, how are you?
I'm great. Thank you for having me, Carol and Tim.
Well, hey, how would you characterize where we are when it comes to ESG?
I would say we're still in the early innings of ESG investing here, and that's because we really have a three-legged stool on our hands with the third leg that is just dropping right now. We've seen increasing demand, favorable economics, but most of all, policy tailwinds that are continuing to drive money and money flow into sustainable investing. Just to break that down a little bit, on the increasing demand side, whether you're hearing stories about retail investors caring about not just how much money they make, but how they make their money, are a big driver on the institutional side is the $67 trillion in assets that we have committed to net zero, really driving capital. You're seeing favorable economics, strong performance of sustainable funds, not just because of underweight to energy or overweight tech, a situation that has certainly reversed this year, but when you look at sector neutral performance as well. But the biggest driver that we're seeing is favorable policy being led out of Europe, but we are seeing global inflection in this.
So, Sarah, I guess what I'm really curious about is the money's been going in for a while. We've been talking about ESG for a long time. It certainly feels like the momentum has picked up in terms of assets going there. Investors are increasingly demanding, though, clarity. And I'm not going to pull out any names, but you can pick a lot of well-known, publicly held entities that we talk about all the time on Bloomberg, and critics of ESG will say, that's not really ESG. So what are you hearing in the universe about what your investors are demanding? Because ESG metrics, there aren't really a nice set of metrics out there to compare ESG between one company and another. There is in some ways, like you can look at boards and so on and so forth, but a lot of it is really hard to measure.
Yes, that's a great question. What we're seeing is this massive convergence of ESG in big data, but the greenwashing debate, what it's called in the sustainability world, continues to rage on. And not only are we seeing,
and rightfully so, wouldn't you say that investors need to really understand when they're putting in it, truly who's really you can lay out goals, but who's really achieving them? What are they doing? And is it really truly, goals that are truly ESG by nature?
Correct. And you won't find disagreement here. Actually, I always say to everyone, there's no shortcut for old-fashioned due diligence. And if you really want to know and ensure that greenwashing isn't happening in your portfolio, you don't talk to an assets house head of ESG. You talk to the portfolio managers and analysts. But I think what's really important in an area where we're continuing to invest heavily is on reporting out metrics around the sustainability of a investment mandate or fund that we're managing right alongside the financial metrics. So there should be no sacrificing of performance to manage money sustainably, but there is a clear need for increased disclosure by the asset management community.
I wonder how much clients are asking about ESG. Are they going to portfolio managers and saying, okay, I'm concerned about returns, obviously, I want to beat the benchmarks, but I want to do this in a way that focuses on ESG companies. What are they saying? What are you hearing from them?
That depends. Well, that's the classic ESG answer is sort of that depends, but that actually really depends on where the clients are sitting in the world. So you're seeing a real divergence between what is going on in Europe in terms of ESG investing, where they think about the concept of fiduciary duty a little bit differently. It's not just about risk and return. It's also about the responsibility you have when you're managing assets, whereas much of the rest of the world is really focused on maximizing those risk-adjusted returns. So depending on where you're sitting, investors are starting to think about it differently. You have a large contingent in Europe that's very much focused on from a risk perspective. However, what you're seeing happening in the rest of the world is really a focus on how to use sustainability to drive alpha and the significant innovation that's happening within companies, how to invest in that. So you're even seeing institutional investors here that may be located in jurisdictions that they don't necessarily are on the first movers for sustainable investing, but they're actually understanding that you have this confluence of three flows, three legs of the stool with end consumer demand, economics, and policy really driving flow into the space. So they're looking to invest from an alpha perspective as well.
All right, understood. Sarah, thanks so much. Sarah Bratton-Hughes, she's head of ESG and sustainable investing at American Century Investments on the phone in New York City. I think about the story, the Business Week story, the MSCI rating story in terms of what they look at. And a lot of it has to do with, profitability at a company and how ESG impacts it. So in terms of ratings.
Yeah, that's the story I think of when I think of ESG. Check that one out at Bloomberg.com/businessweek. You're listening to Bloomberg Radio. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So we've got a great guest coming up.
We do. There's a new book. You've probably heard about it. It's called Davos Man, How the Billionaires Devoured the World. It's by Peter S. Goodman. He's global economics correspondent at the New York Times. It's a really timely read.
Yeah, I was just going to say, it taps into the big inequalities that we're talking about so much here at Bloomberg. So we'll get to him in just a moment. In the meantime, back to your top business stories. I'll look at that close once again on this Monday. It's nice to kind of say goodbye to January.
Indeed, it is on to the trading month of February. Let's run down the January monthly numbers. Going to begin there. Yes, I've got some earnings, but worth pointing out that for the month of January, the Dow was down 3.3%, S&P down 5.3% on the month, Nasdaq on the month down by 9% today. Big day for the bulls with the Dow, the S&P, Nasdaq all advancing, ending a volatile month with the biggest two-day rally since 2020. Beaten down tech names, powering a late rebound. S&P up 83, up by 1.9%. The Dow advanced today by 406, up by 1.2%. Nasdaq up 469, up by 3.4%. 10-year yield 1.78%. Spot gold up 0.4%, 17.98 the ounce. And West Texas Intermediate crude today up 1.7%, 88.33. Cannot ignore natural gas rallying today by 5%, 4.87 per million BTUs. So yes, an update on Wall Street. Tracy Mcmillian is head of global asset allocation strategy at Wells Fargo Investment Institute. And here on Bloomberg Business Week, she told us while dip buyers are coming in, there is an important caveat.
We're not so sure that a short-term low is in. A lot of times when we see the 200-day moving average breach with conviction, we'll see a rally, like maybe the one that we're seeing now, and then a bigger drop before prices can start to move higher again.
Earnings news after the bell. NXP Semiconductor forecast revenue for the first quarter. That guidance did beat the average analyst estimate. Shares up after hours. We've got Cirrus Logic gaining 9% in post-market trading after forecasting revenue for the fourth quarter that beat the average analyst estimate. Recapping stocks higher. Big rally today with the S&P up 1.9%, Nasdaq the standout surging 3.4%, the Dow on this final trading day of January up 1.2%. And that's a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, the pandemic has been pretty good for a small group of people, billionaires. According to the World Bank, the world's wealthiest accumulated $4.1 trillion during the pandemic, while at the same time, 100 million people around the world fell into extreme poverty. About 2,750 billionaires, they now control about 3.5% of the world's wealth. So very timely read for us to be joined by Peter S. Goodman. He's global economics correspondent at the New York Times. He's also the author of Davos Man, How the Billionaires Devoured the World. It's a new book that came out earlier this month. Peter, great to have you with us. How are you?
Great to be here. Thanks for having me, guys.
Yeah, we're delighted to chat with you. There's a lot to get to. We got quite a bit of time, but I want to start with the title here. So what is a Davos Man?
Well, Davos Man is this term coined by the political scientist Samuel Huntington back in 2004. He was using it to describe people who go to the World Economic Forum in Davos, Switzerland, this glittering gathering of the world's most powerful people, the billionaire class, heads of state, a few celebrities wandering around now and again. I'm using it to describe not only forum participants and billionaires, but a special kind of billionaire who would have us believe that their interests are our interests collectively. And that's this idea that if we organize our economies and our societies around sending more wealth to the people who already have most of it, the magic of trickle-down economics will take care of the rest, and we will all prosper. We've been running an open-air experiment in this idea that I refer to as the cosmic lie for the last half century, and the results are not at all pretty. This is an idea that Davos Man uses really to protect himself against democracies trying to redistribute the wealth in a fair way.
Well, you choose 5 of these Davos men to highlight throughout the book. Jeff Bezos, Stephen Schwartzman, Larry Fink, Jamie Dimon, Mark Benioff, names that our audience is certainly familiar with. Why these 5 folks? And look, and they're all men.
Yeah, Well, look, in reality, Davos Man is mostly male, mostly American, mostly white. There are lots of exceptions, but that's the rule. Look, I could have picked almost anybody within the billionaire class who goes to Davos and come up with largely the same book. I picked these guys because, it's a cross-section of finance and tech, and two of them, Benioff and Larry Fink in particular, are champions of this idea, stakeholder capitalism, much heralded, much celebrated by much of the business press. This notion that Milton Friedmanism is over and that companies are no longer just organized to return profit to shareholders. Now they're catering to what they call stakeholders. That's labor, local communities, social aims. And, I argue in the book that the pandemic was really the first big test of stakeholder capitalism. In the summer of 2019, a bunch of CEOs coalescing at the Business Roundtable, then headed by Jamie Dimon, actually signed off on this new statement of a purpose of a corporation. And I argue, and I think the pandemic makes pretty clear, that they used this pledge of stakeholder capitalism as a way to say, we've got this. You don't need to tax us. You don't need to regulate us. You can outsource to us with confidence the solving of the world's biggest problems, like climate change, like gender and racial inequality. And the pandemic has shown that that was really a crude exercise in public relations.
Peter, it's really interesting because it's just coming off a conversation we just had about ESG investing, which we talk about a lot here at Bloomberg. And there's so much money going into, I'm sure into the world of ESG to the point where it's becoming, a very significant percentage of overall assets that are out there. How do we kind of change this? Because I think there's a lot of investors who think they're doing good by tapping into ESG, and yet it kind of is, many would argue it's not.
I mean, we need more transparency. There's nothing wrong with the idea of stakeholder capitalism or ESG, right? I mean, if companies want to actually try to solve social aims and they're being transparent about that, and some investors don't want to ride on that particular boat, they don't have to put their money there, that's fine. But we need a way to actually test these claims instead of just, taking it. I mean, here, take a guy like Mark Benioff, who's a guy who does a lot of philanthropy. This is the CEO of Salesforce, big Silicon Valley tech company. He actually says at Davos last year, virtual gathering because they couldn't meet because of the pandemic, CEOs are the real heroes of the pandemic. I mean, he's not talking about frontline medical workers. He's not talking about parents dealing with kids cooped up, dealing with distance learning, or essential workers delivering our food. CEOs, and he says, it was the CEOs of companies who gave us vaccines and credit that staved off bankruptcy.
Right.
He specifically said, the government didn't save you, we saved you.
So, Peter, hold it on that thought because we've got to do some news here, but we will pick up on that point. Peter Goodman, we're talking with global economic correspondent at New York Times. His new book is called Davos Man. We'll continue with him in just a moment.
Let's head to Washington, D.C. now for a check of the latest world and national news with Nancy Lyons. Hey, Nance.
Hey, Tim. At America's request, the UN Security Council took up the threat posed by Russia's military buildup along Ukraine's border. Only Russia and China were against today's public hearing. Bloomberg served Chapman with more.
U.S. Ambassador Linda Thomas-Greenfield said private diplomacy continues and offers Russia the opportunity to stand down.
All of these meetings have been in private. We think it's now time to have a meeting in public. It's about honoring the UN Charter that calls on us to protect peace and security, the peace and security of one of our member states.
The ambassador cited Russian denigration of Ukraine's independence and said Ukrainians have the right to determine their own path. In Washington, Irv Chapman, Bloomberg Radio.
Joe Rogan is apologizing, and Spotify is adding content advisories to his podcast episodes that cover COVID-19. It's all an effort to tamp down a controversy around misinformation that had singers Neil Young and Joni Mitchell pulling their music off the platform. Gigi Granville is a professor at the Johns Hopkins Bloomberg School of Public Health.
you have to shut the poison off at the source. You know, it's contaminating the discourse, and we need to have a lot more of the right information, the correct information, so that people can make an informed decision.
Johns Hopkins professor Gigi Granville. Spotify rebounded today after losing nearly $4 billion in market value last week. Canadian Prime Minister Justin Trudeau says he's tested positive for COVID-19, but is feeling fine and will work remotely. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Carol Massar, along with Tim Stenovic, here in our Interactive Broker studio. We're going to get back to Peter Goodman in just a moment. We're talking about his book, Davos Man, How the Billionaires Devoured the World. We'll get to him again in just a moment. In the meantime, interesting story about McDonald's.
Yeah, some McDonald's investors have criticized the fast food chain for agreeing to allow former CEO Steve Easterbrook to return $105 million in compensation following his ouster over sexual relations with subordinates, saying that the company, well, they should have gotten more.
So he returned $105 million. He was fired back in 2019. He was 4 years on the job. He reached a settlement last month with the company, which had sued to claw back the compensation. A trio of pension funds tied to the Teamsters Union said in court filings that McDonald's also should have demanded reimbursement for millions in legal fees spent litigating his ouster. He did get to walk away with a $37 million severance package. I don't know about you. Your son is little. My daughter is 18. And one of the things that we always talk about is actions have consequences. Like, there has to be, if there isn't some penalty if you do something wrong, and I don't know, is $37 million a penalty?
Well, that's kind of what the investors said in this court filing, Carol. Here's what they wrote. Board members, they weren't acting in the best interest of shareholders by keeping, quote, secret such salacious misconduct and paying Easterbrook a lavish severance package to quietly leave the company.
Well, and what's difficult is, and you will hear this in a lot of stories about senior executives, like they negotiate their out package going in.
Yeah.
And so it's a contract, and legally, I'm sure, I don't know, I'm just saying generally that there's often some terms so that if something goes wrong, what is the exit package?
Well, in court papers, the company accused the former CEO of lying about his sexual liaisons with underlings and sending dozens of sexually explicit pictures of women, actually using his work email. The company originally sought to recoup the severance package, which it valued at $37 million. It didn't break down specifically, Carol, the $105 million, what that covered.
Yeah, exactly. But this is a big, part of the discussion that we're having about accountability.
Yeah.
We talk about ESG. ESG can go a long way. Governance, this certainly plays into it, and those issues that investors want to know about. We're going to get back to Peter Goodman, though. We're talking about his book, Davos Man. We'll continue with that conversation right here on Bloomberg Business Week on Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a developing story. New York Times making news after ours. New York Times Company is acquiring Wordle. Wordle gives players 6 tries to guess a 5-letter mystery word. Shares up now by just about 3.4%. New York Times after ours. Well, today's 5-letter word for the market, no mystery. That word, rally. The Dow, the S&P, Nasdaq all advanced today. In fact, best 2-day rally since 2020 for Nasdaq, capping a volatile month. Let's get right to the monthly numbers, because for the month of January, we're on to the trading month of February, Nasdaq down 9%, S&P on the month down 5.3%, the Dow this month down 3.3%. Today, though, an up day, the Dow, the S&P, Nasdaq all pushing higher. S&P 500 index up 83, up 1.9%, beaten down tech shares among the big winners. Nasdaq surged 3.4%, the Dow up 406, up 1.2%. 10-year down 3/30 seconds, 10-year yield 1.78%, spot gold up 0.3%, 17.97 the ounce, West Texas Intermediate crude up 1.7%, 88.28 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You play Wordle, right? Oh, we lost Charlie.
Yeah.
He's off. He's
Well,
probably off playing
He's
Wordle.
playing Wordle. I haven't done it yet today. Hey, I want to get right back to Peter S. Goodman, global economic correspondent at the New York Times. He joins us once again on the phone from New York City to talk about his new book, Davos Man, How the Billionaires Devoured the World. Peter, before we went to break, you were talking about how Mark Benioff of Salesforce last year at the virtual Davos event talked about how the CEOs were the real heroes. And you write about that in your book. You engaged with Mark Benioff for this book. You spoke to him, and I know I'm wondering what the productive conversation is around that. Like, what did he tell you when faced with your criticism?
Yeah, he seemed to be into the back and forth, which I think is an indicator of how these guys use their participation in what they call multi-stakeholder dialogues. They love to go to Davos and engage in these earnest conversations about climate change and race and class, and they just don't like to actually do anything. They're not into sacrifice. They're into finding win-win solutions to every problem and using Davos to signal their virtue. So Benioff will talk openly about anything. I mean, I've been to Davos and seen CEOs like Benioff go off and simulate the Syrian refugee experience. They'll be blindfolded and led around in the dark while people are shouting at them in a language they don't understand, demanding papers, and then they all congratulate themselves for their empathy, and they go off and eat truffles and drink champagne at a banquet, hosted by some global bank. Benioff was very willing to get into it, but the status quo reigns with Davos Man.
How do we work through this? Tim and I talk about this a lot, Peter, I certainly feel fortunate, but I am the granddaughter of immigrants who came with nothing, and I've seen or heard about parents going through the Depression. But I've worked really hard to achieve a certain amount, and, and not on the level of billionaires. I understand that, but feel very torn, certainly. There are people who are just in the equity markets through their 401ks who have benefited during this pandemic. We're not billionaires, but we have benefited. Others have not. So what's the productive, like Tim talks about, what's the productive conversation that we need to be having? Is it with lawmakers? Is it with CEOs? We do this at Bloomberg. We have these conversations and get to some uncomfortable areas. So how do we get to a better point here? Or what is it that we need to be asking of these CEOs?
We don't really need anything radical, and we don't really need to ask much of the CEOs. I mean, they can go on and maximize profits and look for innovation and run their companies. That's all good and well. I mean, I'm not suggesting that we ought to expect that they're going to be what they tell us they are, these like agents of social progress. They're CEOs. Let them run their companies. But those of us who are living in democracy ought to be demanding the things that we used to have: progressive taxation, labor power, so that workers can actually get a commensurate share of the gains. And we need antitrust enforcement. And this is not some sort of radical agenda. This is like what we had in the years after the Second World War till the mid-1970s. And, we can do that again. It's not easy because Davos Man has formidable apparatus that he uses to fight off any attempts at redistribution, any attempts at change. But that's a proven solution in terms of generating economic gains that are helpful to more people.
What about a wealth tax, Peter? What has your reporting told you about the efficacy of a wealth tax?
I mean, we got to have a wealth tax. I mean, anything short of a wealth tax just simply isn't fair, and then most people feel like the game is rigged. I mean, Jeff Bezos, his income is $83,000 a year. That's a salary from Amazon. He's paid about as much as a public school teacher in California. If we tax income, then we live in a world where Jeff Bezos, Steve Schwarzman, who's also a main character in my book, who's worth $35 billion, these guys are going to be paying less in their income and wealth to the government than the people who are scrubbing their toilets. And the result of that isn't simply that we can't finance government programs that it turns out we actually need, especially in an emergency like a pandemic. It's also that we then live in a democracy where large numbers of people have legitimately concluded that their needs and interests, their ability to support their families, just doesn't count very much for the powers that be. And you can draw a direct line between that and the rage that we feel in American life into the January 6th insurrection, the fact that huge numbers of people won't take these COVID vaccines. I mean, a lot of this is just foundationally that people don't believe in the system, and not because they're crazy. I'm not condoning where they go with their conspiracy theories and their racist tropes, but they're vulnerable to political opportunists who will cater to their worst instincts. And unless we deal with inequality, we're stuck with that.
So should we set, well, see, what's hard is we talk about wealth versus income, right? And so how do we really shore up, and is there the political will, I guess, as well, to shore up the income for most Americans so that we can reduce some of these gaps that are out there?
Well, there is political will. The problem is that we don't have a democracy in terms of who's got a seat at the table. I mean, Davos Man hires lobbyists the way most of us hire one accountant to do our taxes if we can even afford that. Davos Man has rigged the game through, threats to ballot access, through deregulation, such that Davos Man's votes count at the table much more than everybody else. So I'm not saying it's like easy to do a wealth tax. Lots of people have tried it and it hasn't happened, but it actually polls pretty well. And when people are educated about how the tax system works, and let's face it, it's not by accident incredibly complicated, which makes it, ripe for manipulation by people who actually can hire lawyers and accountants and lobbyists to help them through it. When people are informed, they see the inequity in the current system where the billionaires are just paying much less as a share of their wealth than everybody else.
So what would you say to somebody who says, okay, wait a second, someone like Jeff Bezos, he pulled himself up by his bootstraps, he created Amazon on his own, he deserves to have as much money as Amazon has made him?
Jeff Bezos does deserve to be very wealthy. He had a fantastic idea. He's revolutionized commerce. I mean, where would we be without e-commerce in the midst of the pandemic? I'm not here to demonize people like Jeff Bezos, but Jeff Bezos is a beneficiary of infrastructure, right? He uses roads paid for by the taxpayer. The smart people working at his company are educated in schools that are financed by the taxpayer. And Jeff Bezos is a beneficiary of trade deals that have been shaped by lobbyists over time to return wealth mostly to people like Jeff Bezos. Moreover, he's making all this wealth not just while his warehouse workers aren't prospering, but because they're not prospering. Most of his warehouse workers have no pandemic protection in the first wave of the pandemic. I'm just saying he's got to pay his fair share while he's rightfully capitalizing on a great idea.
We would love to put you in a round table with all these guys and just continue that discussion. Peter Goodman.
Great.
Yeah, we'll work on that. Peter Goodman, global economic correspondent at the New York Times, on the phone from New York City. His new book, Davos Man, How the Billionaires Devoured the World. It's all relevant to the broader conversation that we've been having over the last couple of years.
Yeah, I really enjoyed it. Really good book. Not just saying that because he was my old editor, by the way, at HuffPost.
Maybe just a little. No. Coming up next is the host of Sound On, Joe Matthew. This is Bloomberg.